Hi there. I welcome you all to this session, Trading Live with me, David. And in this session, where it's basically a continuation from the previous simple ABC strategy, right? In this session, we're going to be talking about how to map out zones where you can buy and sell. We're also going to be talking about how it works and why it matters to every trader. Okay, so get prepared and get set. Firstly, in our previous session, we predicted a move called the ABC move, the ABC strategy, and from what I see right here, it's actually playing out well. Going over to the lower time frame, switching to the lower time frame. This was the move, as you can see right here. On the screen, we saw how I actually told you guys this move is quite repeatable, and this is basically why you need to educate yourself more about how it works and why it works. Okay, right here by your left, you saw the demand zone being mitigated. We also predicted the demand zone right here, which is located at the resistance zone, like we previously said, right? And right now, we'll be talking about how demand and supply zone works. Going to the lower time frame, so we can see a clear picture of how this what's happening right now in the market. This move was predicted in our last session, in our previous session, and if you can recall, I actually told you even if it doesn't play out, at least you have an idea of what the market will likely do, right? So in this session, I'll show you how you can map these zones out, how you can identify the turning points using simple supply and demand zone strategy. The supply and demand zone are turning points where price will visit. In these zones, many traders expect selling pressure or buying pressure to return, making a potential short or long positions. In the case of short, we mean selling, and in the case of long, we mean buying, right? So this is what I mean. We talked about finding these zones. The demand zone we mapped out was around the discount level, if you can remember, such as this. This is found in discount level, right? This is because all demand zones are found in the discount level, and all supply zones are found in the premium level. For instance, we use the Fibonacci retracement tool, extend it from the bottom to the top of the range, just like this. I'm just going to bring you over to the chart so you can see the levels we're mapping out. So you can see from your right, you can see the values from your right. From the right hand side, we can see that the range is between the $13,000 level to all the way to the $16,500 level, right? Within this range, the 50% has a first demand zone, which I'm going to look into right now. Going to the left, you can draw the little triangle just like this. This is where the demand zone is being found, and you can extend it to the right hand side so that you can know when this zone is being mitigated or when the move is about to repeat itself. So if you can see right here in the Fibonacci retracement tool, this demand zone is found in the 61% level, right? And for a more confirmed demand zone, like we previously said, it's mostly found around the 70% of the range. In this case, right here, this is the 70% of the range. Now, from experience, I can tell you of the truth that this first demand zone is more like the passive buyers coming in, so it's likely gonna get liquidated, right? There are aggressive buyers, the buyers who come in the market first, and they'll get liquidated by the passive buyers, which we assume to get to this zone right here, which is found at the 70% of the retracement level, Fibonacci retracement level. So this is a simple way to just to map out your demand zone in case of an uptrend. Because of this move is a very well-known move in the market. Is the retracement move. It's mostly like this. It has a wave, right? Like the ABC kind of move, if you remember. It gives more, scalpers, people who trade intraday trading traders to, trade within this range, just like this. Okay, but this is more like a short term, and I believe the move is over already, right? You remember this? You're looking at your demand zone just to the 70% of the range. Now if we should use our Fibonacci retracement tool, you see from this range, the bottom to the top, in case of an uptrend, I'll just extend it right here so you can see it. This is the 70% of the whole range, or you can say the 78% of the whole range, right? This is it. With that being said, this is more like a short term. This whole scenario here, this whole scenario is more like a short term, and we're dealing more with the long term. The reason why I said it's a short term is because it's more of the retracement move, and we previously had a bearish impulsive move, which is this. So basically we're going to have something like this,